this morning in the area of resilience related to some financial matters, particularly in the context of natural disaster, but they equally apply in terms of the way our economy is structured. They are relevant for some of the experience that we've had in Grand Bahama and Abaco, but also they point out some of the vulnerabilities which we have to address. Davinia spoke about insurance, which is important. We can't escape it. Just accept the fact that it is expensive, but it's not an option as to whether you get it or not. So we have to move beyond that issue and accept the fact that you need the international linkages, because it is really the reinsurance that saves us. The other point to note, what Jeffrey said, you don't have to reinvent the wheel. Solutions are out there, and nothing complements official agencies and others as when you copy and paste the ideas that they've already perfected. So let's do that unashamedly if we need to. So now academics in a different world, right? Plagiarism is a sin. Yes, cite. But I'll talk a little bit about what are some of the costs or the pain points of natural disasters. Look at the resilience that we try to have in our banking sector or our financial sector more generally in terms of how we recover, because that did matter. The foreign exchange side, and why is foreign exchange important? Recovery imports goods and services, and you need foreign exchange to pay for it. We do that because from a standard of living point of view, we could not have done any better. So the counter argument that says internalize and do everything yourself, you wouldn't be as good off or as better off as you are today. So you've already done the optimization, so you need now to have the foreign exchange to get yourself continuously moving along. I want to talk about the household sector and the insurance challenge, because again, that'll come across in the data a little bit, but some of those also apply to the business sector in terms of making sure that the insurance is there and more used. Tourism sector, just one idea that I will touch on there, and the digital currency discussion, again, we're going to gloss over it, but it really just illustrates the point around the resilience and ease of recovery after hurricanes. We have to understand how costly these have been, because when we break down what are the losses for the hurricanes, the biggest loss in there really is property. Income is in there as well, but you have to think of the property as representing, for some of us, years and decades of savings. So you're losing assets, so you may not wake up the next day and be hungry or, in a destitute state, but it's going to take some of us another 15 or 20 years to recover through savings what we've lost. So let's understand that when we look at the asset side. And so yes, the economy may grow for the next 5 to 10 years at a certain rate, but in that period we may still not have accumulated the amount of wealth that may have been lost by some families. And so that's part of the distinction in terms of how, the setback that occurs in the midst of natural disasters. And these impose significant costs on the government. We must never forget that the government doesn't cover its own expenses. We cover the government's expenses. So every cent that the government spends, we pay those as taxpayers. And therefore, if part of our economy improperly structured and the government is stepping in, such as the underinsurance issue, you're paying for it. And so we need to recognize that in terms of making sure that we're attentive to what's going on in the government sector. And if somebody is not paying their fair share of taxes, we should all be upset by it, because then that means those who are paying might be overpaying their share. I'm sorry you can't see everything on the graph, but this is just an illustration of one of the costs that we've had from previous Hurricane. Dorian is not on this chart, but it stops at Matthew. So every time we've had these hurricanes, you see the pains where your greatest loss in the tourism sector is typically right in the few quarters after the storm. So if you're looking at Dorian, We're experiencing the greater losses now because we're back in peak season, and so you've lost it. And thankfully, we usually get back on our feet by the September, November of the next year. So we catch the Thanksgiving or the up season again. And that pattern is repeated over and over in these graphs. The only other time that we've seen the sort of devastation in terms of losses from any recent shock would have been the 2008 period with the Great Recession. And again, the government, their losses tend to get summarized in terms of how the deficit varies from period to period. And for hurricanes, the cost gets passed along to the government in terms of the reconstruction. So in the case of Matthew, tremendous cost. Dorian, again, is not on the graph, and it'll be much more that the government has to cover than in the case of Hurricane Matthew. But again, those are costs that continuously, you have to reset, and you need to borrow. But you make certain that when you're not in the midst of those sort of expensive recoveries, you build up the savings, and so that's why the government needs to have, low deficits in ordinary times and pay down the debt so that when the storms come, it borrows again and it takes on debt. That is the purpose of having the low amount of debt in ordinary times. And similarly, that applies to us in the household situation. Here are two charts that summarizes the study that the IDB and others have done. On the one side, you will see how we classify the cost based on the type of damage. So you look at the infrastructure and the assets. The private sector, if you add together businesses and households, they are where most of the losses were centered. And the households in this represent about 70%. Keep that figure in mind, because when the insurance numbers start coming up, they're only around about 60% in terms of claims. That means that they're underinsured. So that's coming out in those numbers. And I can assure you, that difference, the government will never be able to make that up on its own. So if you're underinsured, you will lose permanently in cases like this, depending on the extent of your underinsurance. The other thing to notice is in the case of the businesses, the losses, again, are very substantial. Assets, businesses lose considerably more in the comparison because of the lost revenue. On the household side, we lose a lot of income, but we also lose our homes. And so that's where a greater part of our losses. And so the insurance for them is probably around business disruption as well as around the assets. For the government, you're losing revenue. So if you look at what was happening before and after, but at the same time, there are necessary costs that you have to take on. Some of it is giving the utilities companies the support to recover infrastructure, others providing the social assistance, repairing the roads. And at the same time, your revenue sources have dwindled. And the net effect of it in the Bahamian case for Dorian is you see this huge ballooning of what the government is projecting the deficit to be as compared to being on this, good course to get a really compact deficit outcome for the fiscal year in the absence of a hurricane. So that's a very telling story in terms of the deficit. And I just want to say that you do not want to get too fixated on the size of that. What is always important is what we're spending those resources on. Let's focus particularly on what it is that we're paying for as taxpayers with the debts that we're taking on, because in some cases they are necessary expenditures. Now let's talk about financial resilience in the context of storms. One of the things that matters is that, first of all, we don't want the banks to fail and people to lose their deposits. Banks fail when they cannot collect back the monies they lent. Now you're in a hurricane, people who are supposed to be paying back the loans are on tough times. Good business practices, now you got to give them some more grace and forbearance, and so you suspend the repayments for a while. You allow people to top up, even if they were a little bit what you thought in the danger zone in terms of the amount of debt that they were carrying. You give them a little bit more, provided they have the space to take it on. But the only way you can do that is if you've built up the strength before the storm hits. So for banks, the emphasis is always on making sure that they are in a good financial state before the shocks hit. And the way we summarize that is in terms of looking at the amount of capital that they're carrying. And in the Bahamas case, our banks have almost $1 billion in surplus capital. That 97, there should be 970 million, not 97 million, in terms of the surplus amount of capital based upon the way we do the calculation. So that gives them a cushion. As a matter of fact, that cushion is so great for the Bahamas. We're still more concerned about the fact that that's too much sitting there. That's almost like gasoline, right, in the right conditions. So our emphasis is still on getting the banks to reduce that surplus, and some of it means that we support and encourage them to pay out some of that as dividends. Yes, that's money leaving the country, but if we do it in an orderly fashion, we avoid mishaps that could come about if the funds get used in an explosive way to lend in other times. So from that point of view, our banks are in a good position. But to get to this position, a lot of work has to happen in the ordinary times to make sure that they're doing the healthy practices around lending, and they're not lending in ways that can come back to harm them. And we're going to get to a better place there in terms of how the banks manage their lending, particularly when you get a credit bureau set up, because then you can have more information to assess the risk that borrowers might pose in different situations, and you can gauge the amount of credit that borrowers might be able to access. And that's a good thing, particularly in terms of persons being able to defend the position as to whether they are a high-quality borrower and therefore deserve better terms on the loans that they may be getting from the bank. So that is very important in terms of understanding the role that a credit bureau will play. Fortunately for us, though, we're lucky coming out of Dorian because devastation to the two islands really represented, around about 10% or less, just less than 10% of the credit exposures of the banks. So they could manage that type of fallout. And in another situation, you would have to manage it much more skillfully. Even a lower rated hurricane on a New Providence could cause greater losses than the intense damage that we experienced in Grand Bahama and East Grand Bahama and Abaco particularly. But the bottom line is that that exposure being limited has helped. And notwithstanding the logistics that we still have to improve around the insurance experience, the insurance payouts have allowed a lot of borrowers to repay portions of credit outstanding. And we saw that in terms of the tens of millions of dollars in loans that were repaid between August, September, and the end of December. And there probably are going to be more settlements because all of the insurance payouts have not been made yet. We also see, though, one of the downside in the sense that people are under greater strain. So if you look at the numbers, on average, the delinquency rate in the banks decreased from August to December overall for the economy, but you see the pressures more so in Grand Bahama than in Abaco. But in both cases, delinquency rates went up, and that's understandable given the circumstances. But the point that these two islands represented a smaller exposure meant that the overall direction of improvements still outweighed the weakness in terms of what was happening in those islands. But the strains are there, and we continue to watch because we don't believe that December is the peak in terms of those strains. So we're monitoring continuously to see what is happening. The household sector we have to pay very close attention to because the underinsurance or low average savings are problems, particularly when you have these kinds of shocks. We have to think that insurance is a part of the cost of our housing, and however we jiggle things or we shift things around so that it fits, you have to find the affordable package from the housing point of view. We cannot avoid that. Yes, we will address some of that through building in a more resilient fashion and wisely choosing where to build. So, but let's remember that somewhere in there, we have to look at insurance. Insurance costs are shared globally. So our insurance premiums, to some extent, might reflect administrative efficiencies or inefficiencies in the local companies, but it mostly reflects the international risk, which if they've shared it out as best they can, if disasters and other events are happening internationally, then all of us who buy insurance, we absorb those costs, and when we get hit, they absorb our costs. So that is very important in terms of understanding. But bottom line is, we should not be looking at it as an option. We need to get to the point where it does become second nature in terms of how we deal with it. And I know it's expensive. I've heard particularly, the stark differences in terms of the coverage with or without the hurricane, in terms of what the savings are that people experience. And many of us do not buy numbers, right? Or spin. But so many of us who are in that same category do the equivalent of the spin and playing the numbers with hurricane season. So think about that and look at the average losses you incur in those cases. So public policy, why does public policy matter here? Public policy matters because otherwise taxpayers are carrying the cost. So let's think about how public policy can be used to make sure that in our private lives we do a better job of taking on insurance. And then the other side of insurance is the savings in your piggy bank, because even if you're fully insured, there's such a thing as a deductible. And in the best case scenario, if you get a full payout, if you don't have the extra cash to supplement the payout, you still have a challenge bouncing back. So a part of the way families insure has to be the focus on savings and the behavioral patterns around how you accumulate savings. Let's find ways to improve those. We can do some of it through regulations at a central bank level, but we only touch the commercial banks, and we only touch you, for example, when you decide to borrow. So again, thinking about how you approach the savings issue nationally becomes more important. I've touched on the fact that foreign exchange is important, and that is because we always need it to bounce back. So we focus on making certain that the foreign exchange buffers are there so when we get back out of the storms. One of the ways that we always get foreign exchange, which is why, again, our big brothers, the government, need to have a healthy balance sheet, is that some of the borrowings that they do are composed in foreign exchange, and that helps supplement the needs. So if the government can borrow, you're in a helpless state if the only borrowing the government can do is to borrow from a central bank and print money, because that doesn't give the government foreign exchange. The creditworthiness that needs to be there is the government to be able to attract financing from external and other sources that can help a country pay for the recovery expenses. So from that point of view, the government is an important component in there. Insurance is the other component. And the third component in there are the foreign reserves, which represent in a collective sense some of the savings that we've accumulated. And if you look at where we are today, the foreign reserves are high. Some of that boost, at least about 500 million of it between the end of last year and the year before, is the reinsurance advances. And some of that money is still coming in. And it's all going to be spent, right? That 500 million or more boost. But that's precisely the reason why it was there. We needed it to spend, and we're not going to agonize about it being spent. We want it to be spent, and we want it to be spent as quickly and effectively as important, because then that's a sign of the speed at which you're getting out of this setback. In the case of Dorian, this is an indication of the projected reinsurance receipts. The chart is a little bit misleading, because once everything is settled, we could easily have over $1 billion in reinsurance settlements. The total amount that the insurance companies pay out will be a little bit higher than that, because they're also going to pay out some of their claims from their own reserves. But that meant that those insurance companies are also saved from failure, in the sense that there's no way our insurance industry could have covered all of those losses if they did not have access to reinsurance. That is very important to understand in terms, and then every time we have a storm that hits and there's a shock, the reinsurance flows come in and we use it to help with the rebuilding. So having a better insurance coverage overall provides for the economic sustainability or stability that Davinia was referring to. Yes, Matthew, in the case of Hurricane Matthew, we had almost $500 million in reinsurance flows that came in to settle claims, which is quite high. I think before Dorian, Matthew was the largest single amount of receipts we got from reinsurance. So I only highlighted it in yellow just to point out that it was Matthew. The one idea that I wanted to put out there for tourism is that if the downtown Freeport had been hit by the Cat 5 to the extent that, say, this facility was severely damaged, think about how long it takes to repair it and get it back online. And think about the Carnival cruise ship that came in the day before the storm and was able to come back a day and a half afterwards, provided you could accommodate them. Bottom line is, in tourism, we have to think about being able to move our assets out of harm's way. You can't move a hotel out of harm's way. So we have to look at investing in the maritime side of the industry. The framework exists for it. You can invest in that area. You probably need some fiscal policy incentives there as well, because on the exchange control side, you can invest in those types of assets with the approval of the central bank, no issues. If you have vessels and crafts right now, and if you just do a look around today, it is already big business in the Bahamas. The question now is who's behind it? And so we need more local capital invested in activities like that, because during the danger points of our hurricane season, you take your assets elsewhere. You bring them back in good times and with sufficient warning. Even if something is aimed your way, you can get on your assets and move them out of the way. Plus, it exploits what the foreign investors are exploiting, which are the marine ecosystem, which is very profitable from the tourism side. So think about investments more in that side of the industry, in addition to the way we're looking at the land side, from the standpoint that you can recover much more readily. The final point is really around the financial technology, and that's really getting at the fact that trying to recover when everything is based upon physical structures is a problem. Banking is already available in the cloud. But banking in the cloud, the payments are not in the cloud. Still an issue, because then you have to go to the ATM to get the cash, and the cloud systems will update the records, right? But financial technology in this context of recovery is really looking at how you can make your financial system better equipped to rapidly restore the essential services after a storm. There's an element to this which I do not mention in here, because in some cases, it doesn't matter how much cash you have. There may be no place to spend it. So a part of the partners of this is making certain that, from a logistical point of view, we also enable the other side of commerce to recover. But we have the independence now to choose, as we usually do when we shop and spend. So we need the logistics around how businesses recover to be in place. When I went to Auckland and Crooked Island after Joaquin, didn't matter how much money you had, the grocery store was gone. So a part of the recovery strategy, in my view, would be, how do I get that part of the activity back up, so people who have money to spend, they can choose what they want to buy, as opposed to just being on the receiving side of a prepackaged care package. So, but here, as far as getting the payment side back up, one can focus on the electronic side of payments and making certain that they're accessible to all, which means that your businesses have to be enabled to receive electronic payments. Yes, the infrastructure needs to be there, and individuals have to have equal access to it. Not everybody has access to a credit card or a debit card. And so immediately, some of us are at a disadvantage even in ordinary times. Some of us who have credit cards or debit cards, we're quite happy because we only move in certain circles, and in those circles we can always use our credit cards. So that's very important, but then that doesn't address financial inclusion or financial exclusion. And I'll tell you another secret in the Bahamas, in case you didn't know it. Cash does not fly commercially. The government, the banks, they charter aircraft to get cash wherever they get them in the Bahamas. So even if you put an ATM someplace where you don't have a bank, you have the logistical nightmare of getting cash to and from it, and hiring the security and all of the other services that are associated with getting the cash in and out of the machine. So there are some very serious logistical issues around cash management, cash handling that we need to get beyond in terms of the way we deliver payment services. And so from that point of view, that's part of our push in terms of getting our payment system electronic and in an accessible way, and doing it in such a way that it is accessible to everybody. And that is where we're focused with the central bank digital currency and the project Sand Dollar, where it's the same Bahamian dollar that you're accustomed to. It will never be different in law. So don't think of it as that. There's some other prejudices we have in terms of how we characterize it, which I wouldn't get into. But the bottom line is Bahamian currency, the central bank's liabilities. It only has value based on the fact that we have adequate foreign reserves to support it. And the idea here is that you want to have a system for rapid recovery post-disasters. I'll give you one lesson. When we went into Abaco to just ease in with the pilot, just before the payments were about to go through, the straw guy says, "Oh, I lost internet connection." Now, what do you do? Well, so the way we try to address that in here is to build in the redundancies around communication. So there is an emphasis here on having that redundant wireless connectivity infrastructure. And so that provides for the use of the payment system even when the data network may have its challenges, or you go into an area where the data coverage is a little bit degraded. The other thing is we're perfecting, but it's not yet in testing, what we call an offline feature, which would mean that let's suppose that Grand Bahama is a network. But Grand Bahama lose all communications with New Providence or elsewhere. The system in Grand Bahama will be able to function offline in terms of, because it would have sufficient of the data stored within the nodes so that the transactions can happen. At some point we might be able to go to an even more sophisticated version or offline. Even though the government can do its part, we have to be considerably more ambitious in terms of the volume of savings. We need tens of millions of dollars, I think, in those types of financing facilities post natural disasters. And it would be unreasonable to put that burden entirely on the government, because the government will only be able to go so far in that process. So let's focus on that and see how we can put a dent in that issue. Thank you very much for your attention.